Let's get going. Right, thank you for coming. And we've we've got very high markets up here. So just excuse me one moment. Sorry, minor problem. I'll be with you in one moment. Right, apologies for that. Yeah, so we are very high. At the moment, I am still buying dips and have been today. Not trading an awful lot today. I'll go through a couple of things I've done, but at the moment, this market is still for buying as far as I'm concerned. And until we get a sell signal, I will keep buying. One of the things that I look for is, I think at the very least, this market needs to blow up some more. I think it needs to head further north before we are potentially going to get a sell signal. Of course, if you get any sort of peak like this and a lower close, then that could be the potential for this to pull back. But at the moment, stocks are getting expensive. But if you look at the Dow components, this is the Dow Daily Index. If you look at the Dow components, the market is still getting bought. I mean, for example, one of the problems that the market had was Boeing. Boeing is a major component of the Dow Index. The Dow Index, indices like the Dow, because they are so huge, it has a huge following. The Dow is an extremely good index to use to trade because it's very, very technical. So we got in components like the Boeing still looking as if this could, still trying to find a base after the crashes and the problems. So that's a decent component. But if you then look at key component parts such as Disney, United Health was a major problem for the Dow. This is trying to find a base. So I keep a check on this. You can see how it's just coming to major support now from that sell up here. So I think it could, if this starts to bottom out as well, stocks that are weak in the Dow, if these start to pick up, then I think the overall market could start, the Dow could continue higher. Quality stocks like Goldman's, these are bellwethers. Well, that chart is a bit out of date. So if you are a stock trader, then we had the huge obvious signal in the Boxing Day. Why anybody was trading in Boxing Day, I don't know. Of course, the US market doesn't have a Boxing Day. What is Boxing Day? Good question. Great. So, yeah, all the time that you got a quality stock like Goldman Sachs pulling up and Disney holding up, then I think the markets can still go higher. As for anything that's worth trading here, I think I will keep an eye out on this United Health. I think that is a huge amount of support down there. So I think if this give it another couple of days, back end of this week, I'll check the earnings date on this. I don't know when the earnings date is yet. but this could potentially be. It's not a particularly expensive stock. However, if you were to trade that in even a UK spread betting account would let you trade that, so you don't have to trade, don't have to buy the underlying stock, which of course you, unless you've got a huge account, you wouldn't end up buying much of it. So you can use leverage on that without sophisticated options and futures markets. So keep an eye on that one if you are a stock trader. But overall, let me just go back to the Dow. I've not traded a lot today. So one of the questions I commonly get asked is, if you are day trading, how much money could you make? Well, this was a trade I was in for 16 minutes, I think. So I day trade, and on this particular day, this was last Thursday, I like trading the Dow at the end of the day. So I did 4.99. I was in the trade from 2:17 Eastern Time to 2:31 Eastern Time. So I was in the trade for 14 minutes and just made 500 quid in 14 minutes. So quick trade, then total off, closed it all off. Of course, after this, in actual fact, when I looked, I got out of the trade about 20-30 minutes before the US market closed, and we ended up with a intra-week buy signal on the Dow, and the following day we pushed up about 300 pips. So sadly, I actually, by scalping in this account, I missed a trick. The buy signal wasn't formed until the market closed, so I missed that. Otherwise, I would have traded that. So what I had to do was come in on the Friday and try and buy a dip, so buy higher up. I mean, the advantages of day trading is that you can just close the whole account, bank it, and close the whole account. The disadvantage is if you are purely scalping, and I obviously do. A lot of investing and day trading as well, because day trading is good income, but scalping is good daily income. This is my account today. I'll show you what I did in oil. It's just a little trick, little trade in oil. So I have not traded much to really make your money on today's Dow. I mean, we had a huge downdraft at the open, which frankly wasn't tradable unless you were very, very up to date, had prepped at 2 o'clock instead of 2:15, 2:30, and realised what was happening at the highs. But anyway, I stood aside, waited for 45 minutes after the open, started to buy a dip, and just took some small moves out of it. I'll show you what I did on the oil, and this is relevant for, I know a lot of you here are for some longer term stuff as well. Let's just look at the oil today, because this is a trade setup that I talk about at my initial presentations. This is we traded this in the live trading room, the same setup. We traded this last Wednesday evening after the Fed minutes. Exactly the same setup. I was taught this a very, very long time ago, and I still use it. This is the oil on a 5-minute chart. So it's a simple day trading exercise. The overall, we'll look at oil in a minute for the bigger picture, but what I did on oil was to isolate the move around the invent. So the invent's 3:30 UK time. That was the market's reaction to the inventory. Down here was huge intra-week support, and or even daily support even. So and up here at 50, just up here, was a futures gap. So what I mean by futures gap, most of you know, but this was the level of the market when it closed in the cash market yesterday, 64.50. So I took a dip down here as it came out of this area here, and just took it back in 50%, half the measure of that gap. That's not my normal inventory trade. Normally I would measure this off, and if it was a more violent move, because this is relative, this is nothing. A 30 pip move on invents is nothing to me anyway. I'm used to seeing 50, 60, 70 pips on an invents move, so it was pretty quiet. I thought 50% gap fill would do me nicely, a few quid in the bank. Took it off. I was only in the trade for 15 minutes, 10-15 minutes, not a lot. And a lot of people must have followed suit, because as the market has got to 64.25, so I took half of that, half of this gap. 64.25, took it off, and here we are back down coming into 64. And this market, typically the old pits close at 7:15, so it's possible there could be another trade in this, because we have another hour and 15 minutes for the oil market to close, the cash market to close. So that was quite useful. So as a day trader, if you know what you're doing and you can look for these measured moves, you can get a good income. This time of year, and let's look at the daily chart, you can see in the first quarter of the year you generally get good liquidity. So I'll talk about the US stock market in a minute. Let's just talk about oil while I'm on the subject of oil. This has been tracking, typically this does track the indices. You can see this reversed exactly in the same way as the Dow reversed pretty much the back end of the year, well, almost the last day of the year. And this pattern in the market that we've seen here is almost identical, not to the same strength, but almost identical to the Nasdaq. And what the Nasdaq does, the rest of the market follows as a general rule of thumb, and that includes oil. Oil is very, very sensitive to momentum in the overall market, consumer momentum and market momentum. So oil will, if the indices and the markets keep making new highs, this could potentially get up to 70 still. I've talked about needing a dip to 60, 62, but at the moment we're not getting it. So one of the reasons why I'm not swing trading this, not holding it, is because we are very high, we're very vulnerable. This is a sticky area for oil to hover around, so it's great for day traders. It's hard work, it's riskier for swing traders, unless of course you get a decent pullback and it moves off again. And the kind of pullbacks I'm talking about are pullbacks that are part of the wave pattern. So we've hit a clear level up here in the trading, so that's a healthy pullback in a market that has already had a decent leg. This pullback generates another leg up. That's expensive. That's another decent pullback. So the problem with oil at the moment is that we're not getting, after this leg, we've not had a decent pullback. So until we get that, are we going to get it? I don't know. But until we get that, I wouldn't buy and hold oil. As a general rule of thumb, unless we got a really good sell signal, I don't tend to, well, I wouldn't short oil here. I'd want to short at a much more conclusive level personally. Okay, so let's now go back to stocks, and this Dow is still winding up. So if I look at the bigger picture in the Dow, so what's the bigger picture? I think the bigger picture is this. I think if you put this retracement tool over this last leg, I think we could potentially go all the way to 27,300. I think these are Fibonacci numbers for those of you who are not familiar with it. I suspect most of you, if not all of you in the room, are familiar with it. If you're not, it doesn't matter. Don't worry, just forget about it for now. But you can see when a market respects these levels, then pay attention. So market ran up, it pulled. So what I'm marking is pullback levels. There's no actual fib levels here. We're sitting in open space at the moment, but just look at this level here, 26,100. So I think until we get to a level at which this market can sit on, I don't, unless we get to close on 26,000, I think this market could have another leg up in it. You can see some of the market does look fragile at some of these points. You can see we're very fragile here. Then we get this a little bit like the oil. I said in oil, the problem with oil at the moment is we haven't had a decent dip. Once we get fragile and get a decent dip, then we get the markets going again. Got very fragile up here, we dipped, and then we got another move up here. We get very thin on the ground. Once the dip's over and done with, then we get the push. So you can notice we're getting more and more thinner periods up here. So hence the reason why many people are looking for, at the moment, people are still looking for shorts. And they could well be right, but that's not me at the moment. Okay, so we've looked at Dow components. The companies that make this up, they are stacking up. We've got some potential big ones that have been a problem, like Boeing and United Health, that could be reversing. We've looked at the way in which the oil can track the market. So I talked about the NASDAQ without showing the NASDAQ, so let's have a look at that one. Like I said, what this market does, the rest of the market follows. I was told that by a highly regarded trader a long time ago, and so that is something that I use on a regular basis. So here we are at all-time highs. Is that right? Must be. Yeah, we're at all-time highs, just touching and showing no signs at the moment. Obviously, we're 2 hours 40 minutes off the close today, showing no signs of that giving up. So this is actually somewhat cleaner, isn't it? We've got much fewer shallow periods here, whereas the Dow has really had problems with a couple of major components that's held it back. So the question I posed, that I'm posing week in, week out at the moment, is should we still be buying dips? At the moment, yes. Am I still buying dips? Yes. And am I looking for shorts? You bet, but not right now. Let's have a look at the S&Ps and the FTSE. Much dodgier. In fact, if we close like this today, that's incredibly thin and precarious. So this looks more likely as it, to pull back at the moment, and if we dither and come back in contact with 28.75, that could get another leg up, but it's dithering as opposed to selling at the moment, so I will be very, very careful at the moment. Although it's vulnerable, it's very vulnerable. We've got any currency traders in the room? Just looking at, take one look at, let's look at the euro, because that has a big impact on the DAX. If you are a DAX trader, then it's always a good idea to keep an eye on the euro, because if this, normally there is a divergent relationship with the euro and the DAX. If the euro is weak, then exporters, DAX components, exporters benefit and profits could be higher. So if the euro starts to perk up, this could provide a lot of problems for the European manufacturing hub of Europe, i.e. Germany. So if I take this off and let's just analyze this market in more detail. This is a gap I've got marked up here because we've currently got a gap in the US and the DAX indices. So if we do break, then at some stage, surely we're going to have to come and find that gap. But if we let's look at the weekly. I'll move on quickly because I know currencies are pretty boring at the moment. I'm not trading much in the way of currencies. But if that, we've got a floor here. I'm looking here at June 17. If we had a potential little buy signal here, it's pathetic, but that was a new low in the range and higher close here. So with a completely flat 2.5 days into, well, 3 days into the market here. So if that starts to perk up and close above that level there in the next week or two, that could provide a problem for the DAX. So that's something to watch out for. Right, this is one market. By all means, keep chucking your questions. I will try and grab them. Alan, did you take 5-minute open trades? Yes. Yeah, that's a good question. Let's talk about the DAX this morning. Let's go back to the usual presentation I do on the 5-minute DAX. Let's take all this off. Yeah, I did take the DAX, and one thing I did say to everybody in the room, I said, look at this at 10 o'clock. If there's no signal, ignore it. Look at it at 10:30. If there is a signal, then consider buying it. And that is exactly what happened. So we spent quite a while watching it, unfortunately, which was really frustrating. And at 10:30, bang on the nail, we have that bar. So it does a little stop run this morning, which is understandable based on the overnight Asian market move. So unfortunately it dithered a lot, but then broke out at 10:30. This market, if it loves 10:30 reversals. On Friday it was about 9:15, but today it was 10:30. So get confirmation at 10:30, and that runs for, well, it breaks at 100, and you almost get 100 pip run into, look at that, it goes to the US Open and just sells right into the US Open. The DAX has been very resilient, very, very resilient, and so resilient it's not filled this gap. And last week, normally you would get a gap fill, and on occasions, back in the last year, we had a gap like this. It got filled and the market collapsed underneath it. So that was something that I was considering when this market was chopping around. But ever since we've had this dip here in the middle of last week and the dip on the Thursday, we've picked up, and this thing has not looked back. So great to trade if you picked up on the Friday morning late Euro session run and this morning's late Euro session run. You've done well. We did grab this one. We did grab this move here because we came into Tuesday looking really weak. You could argue that was even a sell signal, but we ploughed right into a major support level just above the big 12,000 number and run. And at the moment, there is potentially a sell signal up here if that works out. So I will be looking for that later this week. But it's can't help with a short week in Europe. We need to be careful and pick our spot on that one. Okay, the other market I'm interested in. Let's go back to the swing trading and investing for a moment. The other market, you can it's potential breakout pattern in the DAX. The DAX daily is sitting up really nicely, and I still think there's a potential for 12.5 on the DAX. Any close under 12,000, obviously, you might want to think about shorting that. Right, just want to finish up on this market. I think this is a really good chart pattern, and at the moment I'm looking for this funnel pattern. We're still getting dips, we're still on the lower end of this funnel pattern, but if we close above 15 is silver, if we close above this level anytime soon, in the next 2, 3, 4 days, I think this could really blast up, and I think we'll see 16, 17 pretty quickly. I think commodities have been lagging. I mean, look at the way in which the Dow, the US markets have lifted up, and this is an industrial metal, unlike gold that is not an industrial metal. I think that is just waiting to push up, but it's not confirmed yet. It is not confirmed. This will only be confirmed if we close above. At the moment, this is a real sort of holding level, but we do need to close above that 2025 for that to be confirmed. So I am bottom fishing, but I'm bottom fishing with low risk at the moment. And if this works out, I will be adding on pullbacks on the way up. Let's talk about trade management for a moment. I'll just get sidetracked for a moment. What I'm going to tell you now is, where's my pen? Come on, pen. So I'm not the kind of trader. Obviously, I'm at my screens quite a lot during the week. So I'm not going to sit in a market that, if I bought this market down here, I'm not going to stay sitting in it up here. I'm interested in trading trends. So to look for trends, I look for waves. So once I finished dealing with silver and I was getting out up here, I was then buying back here and then selling up here. Scaling in, scaling out, and then got a sell signal here, so I'm just clearing off, just leaving it. Interesting dipping in here, but it struggled, ran my stop up and let myself get stopped out up here. So now I'm just risking taking some low risk positions, seeing if that can pick up and then really start to break. Markets that break like that, let me show you an example. Pattern like this. I don't think this is a very good example. Yeah, it's a sloppy example. I'll try and find a better example. But if I scale this chart right back, oops, I just deleted an alert. That's very, very similar to what I'm looking for in silver. And when you come out of these funnel patterns, they are. I've just taken profits in this today, by the way. I'll explain why in a minute. But when you get decent support, it struggled around the funnel, pull back in early March, and we've just hit a major resistance level, so I decided just to take it off. That's a huge amount of resistance up there at 342. Can it go more? Yeah, probably, but I've had a good run out of it. It's not a particular, it's a bit of a sloppy stock. So I'm hoping I can get some kind of pullback on it. And in fact, if you look at, this is what the DAX is potentially doing now. The DAX has been sitting on a pattern like this right now, and the dips have been getting bought, and it keeps closing higher. So that's very, very similar. So there's a few basic patterns that I like, a few basic patterns that I teach, and looking forward to finding some more of those patterns. Right, there's no more questions coming in. So, I pose the question, should we still be buying this market at the moment, particularly based on, what, a whole bunch of indicators that I use, the NASDAQ being one of them. Yes, I'm still buying dips, and I will still short-term look for new investments and stocks to trade for the foreseeable future. Another market I'll be looking at, like I said, I think commodities are really out of sync with the market. The dollar's strong, so this one's getting this soybeans is getting beaten up by the dollar at the moment. So I will stay away from it, and then see if that picks up at those lows. I'm looking for a three-wave move. Why a three-wave move? Because it's a Fibonacci number. If you're not clear about that, we've got members in the room who are okay. We have people in the room who are just joining my foundation program. You will find out about these gem of the charts and much more in the foundation program. So looking forward to that. That starts next Tuesday. So really looking forward to that. Gold. Yeah, I've steered clear of gold. I'm just a big fan of, wow. You see, this is out of sync with silver, isn't it? At the moment. So there's the huge trend line. Yeah, it's a good example to look at. Notice that we have 4 touches up on this trend line. So on the 4th touch, when they couldn't close it underneath there, we went on a very nice run. So inflation in the US inflation generally is still really tame overall. The central banks are threatening to to even cut rates if the global economy does stutter. So at the moment, with a strong stock market, weak inflation, this gold does not stand a chance. That is a heck of a lot of structure at that base, a heck of a lot of structure at structural support at 1265 area. So if we start to get down there and pick up this trend line at 1260, or maybe even undershoot it at 1250 and start to hold, then I'll be a buyer. But in the meantime, I did used to day trade this back in 06, 07, 08. I loved day trading and intra-week trading this one, particularly particularly as I was trading it in dollars with obviously a UK account. I have a US broker, so a lot of my funds are in dollars, so I have to watch the pound, I have to watch cable very, very carefully and manage and hedge my dollar position. Effectively, I'm constantly short the pound, so that's why I need to hedge. Otherwise, I'm going to get, at the very least, I'm going to chip into my profits. But in 06, 07, 08, when the pound was really weak and the dollar and the gold was really strong, wow, I was all over gold. Good times, very good times. Right, any questions? Thanks for your questions. That's great. I'll be posting a recording of this. As we speak, the Dow is just trickling higher, not doing a whole heap. And you can see the sort of problems it's got. So close above 26.5 and could get a nice little run. In the meantime, it's really struggling. Right, okay, well that's my midweek update. No more questions coming in. So yeah, I'll leave it there. Think of any questions, ask me later on. Thanks for joining me. Okay, have a good evening, and all you members, look forward to seeing you in the morning. Let's hope we can extract something out of this DAX in the morning. All right, thanks very much. See you then.